Hi, my name is Sally Gimmon, and I'm the owner of the TrustIsYou.com and a podcast called Stop Paying Capital Gains Now. First off, I want to apologize. I'm dog sitting and they're moving, so I'm sorry for the hollow thing for it. So sorry about that. But today we are going to talk about the history of the Spendthrift Trust. Yesterday, I told you about how the Spendthrift Trust also avoids probate, just like the Family Trust. Family trust, that's all it does. The spendthrift trust does so much more. It saves you on federal taxes. Everyone wants to save federal taxes. It keeps your information 100% private, and it will keep you from paying any judgments if you get sued. I can't stop you from being sued, but you won't pay a judgment. Because how this is written, you only the person can be sued, and the trust, the spendthrift trust, owns everything. So the old adage from Nelson Rockefeller, own nothing, control everything, is in play here. Several of my clients have saved thousands of dollars from being a petition to be sued. They just send back to the attorney or the lawyer the first page of the trust, and it's taken care of. So now, the history of the Spendthrift Trust. This is legal, it's patented, and it's in the IRS Tax Code 643B. And by the way, it has gone in front of the U.S. Supreme Court twice. Both times, the Supreme Court has favored in honor of the Spendthrift Trust, saying it can enter any contract and it can do business on its behalf. I don't know how much more legal you can get doing this. Only trust attorneys know about this, not regular attorneys. Not making fun of attorneys or CPAs. This is very high level tax returns, 643. Most accountants, when they go to school and what they work with in the workforce world, is in the 300 to 400 level. So this is something that's not taught in schools. So the history about the Spendthrift Trust. It does come from England. It's contract law. Back in history, when King Henry VIII started the Church of England, yes, he's the king who was chopping off his wife's heads and wanted to divorce his wife. The the Roman Catholic Church wouldn't let him do that. So he decided he was going to start the Church of England and tax the lords and ladies of England. The lords and ladies of England went even back in history to Magna Carta. Yeah, I'm bringing up history from eighth grade, I know. I don't have the dates, but you can Google them if you want. So what they have decided in England is that the king, the royalty, can't tax regular people with the Spendthrift Trust. It's legal and it's a contract. It's come over from England to the United States. Hate to tell you, all of you people who don't realize this, we were in English province up until we fought them in the Revolutionary War. Yay, George Washington. So this is a contract on the federal level, not the state level. All of you who have LLCs, S corps, or C corps, that's statutory law on the state level. This is on the federal level. When you have the Spendthrift Trust and how it is written, you will file a 1041 tax return. The majority of people in the United States file 1040 tax returns. Because of this trust. Again, this trust is not your mom and dad's trust. This trust is going to save you federal taxes, keep your information private, and keep you from being sued, keep you from being paying judgments if you're sued. I do split the trust in two. There's the business trust for 1099 income earners. I don't care if you're a real estate agent, if you're a salesperson, if you have a brick and mortar store, they pay 1099 income. I run three businesses through my business trust. Everybody who has a business trust will save 70% on their federal taxes year after year after year. That could be a lot of money. Congratulations. And then the beneficial trust is for investors. I don't care if you're a passive investor, if you're a real estate investor, if you're a crypto investor, crypto miner, doing stock market, doing day trading, options trading, or forex trading. By the way, you forex traders, no offense, you get taxed twice. Interest income and capital gains. You need the Spendthrift Trust. The beneficial Spendthrift Trust is going to save you 5 ways. Capital gains, short term, long term, when you sell something. Interest income. If you're a passive investor, a forex investor, doing the BRRRR strategy, I have 12 notes and they pay me, I'm a mortgage, they pay me monthly. Dividend income. If you're in the stock market, if you're doing options trading, if you're a day trader, if you're a futures trader, you're going to save dividend income. Rental income. If you have short-term rentals, Airbnb, Vrbo, renting to traveling nurses, or many, many doors, yes, you can take off, you can do depreciation, but you still can save your federal taxes. And not least, but finally, royalties. If you are an author, if you are a songwriter, if you're an actor or an actress, or if you're in the NFT world, NFT crypto, NFT real estate, NFT artwork, you're going to save those taxes. Again, I found out about this because I'm a real estate investor and I dabble in crypto. If I can help you save federal taxes legally with the Spendthrift Trust, my name is Sally Gibbon. My website is thetrustisyou.com, and the podcast is Stop Paying Capital Gains Now. Today, a new podcast got dropped. It's talking about Irma when you turn 65 years old. It's a little bit scary, but the trust will help you with that. Thank you for listening. Have a beautiful day and take care. Bye-bye.